You're now listening to the Tax Smart REI Podcast, the number one tax podcast for real estate investors. Thanks for tuning into this week's episode of the Tax Smart REI Podcast. Today we'll be talking about audits. Believe it or not, while audit rates are pretty low, audits do happen, and we're going to be talking about some of the audits that we've seen over the last year or so, including reps, short-term rentals, and other things. We're going through the audit process and then through some case studies of audits that we've successfully defended for our clients, as well as some of our competitors' clients, believe it or not. So stay tuned for that. We'll be diving into all of that in just 1 minute. Breaking news, we just launched our brand new newsletter, REI Daily. After talking with clients and fellow real estate investors, one thing was clear. There wasn't a newsletter that delivered real market insights, concise decision-making info, and relevant tax strategy all in one place. So we created it. REI Daily delivers real estate news that won't put you to sleep, real and concise market insights that aid in your decision-making, legislative updates that actually impact your investments, and tax strategies sprinkled in because the IRS does not need a tip. If you're a real estate investor who wants to stay sharp without shifting through all of the clickbait or fluff, this is for you. And to celebrate the launch, you'll have a chance to win a free one-on-one tax strategy call with one of our top real estate experts. No pitch, just strategy. Subscribe now by visiting www.therealestatecpa.com/subscribe. Again, you can subscribe now by visiting www.therealestatecpa.com/subscribe. We'll see you in the inbox, but now right back to the show. All right, and we're back. Today we're joined with Troy Silies, who is VP of Tax here at Hall CPA, and has handled a lot of different audits for our clients, as well as overseen others as well. So, Troy, can you just give us a brief intro to yourself and, basically how we got involved in some of these audits?
Yeah, thank you, Tom. So once again, Tom said I am VP of Tax here at Hall CPA, and we want to make sure our clients, we kind of want to go above and beyond to have our clients audit ready, right? Now, that's not necessarily required of us and our firm, but what we've also seen during this process is a lot of other CPAs, they get scared, or even clients as well, they get scared when they get a nice bad letter from the IRS or good letter, and they run for the hills. They say, sorry, can't do, they can't help you. That is not us and our firm, so we really wanted to invite people into our system, our ecosystem, to help them out and actually support them in these times. Even when they're not our client and we don't have a lot of that context, but how can we win? We'll go over examples later, but that's really how we did it and built it, especially the Inflation Reduction Act back during the Biden administration. You probably saw all these news articles, 80,000 IRS agents. Now, that wasn't really true fully, but there was a lot of truth there. They did get a lot of funding and so forth, and that really shot up audits. So we as a firm, because we are very tech savvy or technical relating to short-term rentals, real estate professional, and other areas, we wanted to be ready for that. And that really shot up, and we defended a lot of different audits and so forth. And it was really fun learning experience, and each audit's its own little animal is what I'll say.
Yeah. So I'm excited to dive into all of that here for our listeners. But before we get to some of the case studies and some of the things that we've done and we've seen for clients, let's just take a quick overview of the audit process. What happens when an audit's initiated and kind of what does the process look like?
Yeah, so it does depend on the type of audit. So there are different levels of audits. I really kind of classify them into three separate groups. You have correspondence audit. I'm starting from the lowest level to the highest level. So correspondence audits, and then it goes really to a IRS office audit, and then an IRS field visit, okay? So let's start back from the beginning. So correspondence is very similar what it sounds like. It's all through fax, mail, like snail mail, and fax. So you don't really get to talk to a person very much during correspondence audits, but they'll send you a letter. By the way, the IRS never calls you first. You always get everything from a mail. So if you ever get something, an IRS calling you, it's a 100% a scam, okay, until you've at least got mail. So everyone listening, please be aware of that. There's a lot of scams out there. But you'll get something from the mail, then they'll either set up a call or so forth, or just a correspondence. You have to do everything through snail mail or fax. They'll ask for documentation. You provide it. You fax them. It's very, I would say, a little bit unprofessional in a sense because there's no real communication with a person. It's very just, through correspondence. Very hard to get a lot more insights there, but that's the lowest level. And usually those wrap up quicker. The next level up is your IRS office. So in that case, you actually go to your local IRS office, probably closer to your local city, wherever you may be. There's some other smaller offices as well. And you'll go and actually sit face to face with an auditor, and they'll ask you questions. They'll interview you. You'll provide some support. And then afterwards, you'll leave and you'll do a lot more through kind of snail mail and fax, like we mentioned before, but you at least have someone you can usually call and talk to. And then the last one is a field audit. That's usually, now it depends on the type of business that you have. If you have actually like a partnership or S Corp or C Corp, they're going to come to your place of business. But it also can be if you have rental properties, they may come to your house or your home office or something of that sort. The IRS agent will actually come out to your place of business and actually sit down with you and do kind of similar to the office audit, but they're all at your place of business. They may want to look at things. They may even do inventory counts or anything of that sort. Usually we don't see that, but it can go that far that they want to physically inspect something just to, that sounds silly, but tangibly touch it and know, hey, this rental property actually exists, or this equipment actually exists, depending on the type of audit. So those are kind of the different levels overall.
Okay. And when someone receives an audit, what should they do when they receive an audit? Like, what's the first step they should do?
Yeah, and we'll probably go through some case studies of what we've seen and kind of the results and the pain that was actually identified during the process. But if you get that letter, at first, you're probably going to have to deal with your emotions, right? You're going to be like, what is this? How am I going to handle this? So a few words of advice, though. If you review that first letter you get from the IRS, nowhere does it say the word audit. Okay, it does not say the word audit anywhere. It says examination. So I want to be really clear that most people don't know what it is, that letter. They get scared. They see IRS on the letterhead and they run for the hills. But really review it. If it says the word examination, you're in one of those three buckets before. What you're going to do right from that point is to get someone involved to represent you. You don't, as a typical person, you do not know how the IRS works, the procedures, and the substantiation requirements that you need, unless maybe you are an expert in Internal Revenue Code and understand Treasury regulations, what needs to happen, but typically not. So reach out to who's going to be able to support you. On that case, that's usually a CPA, your tax preparer, or it could be a tax attorney or something of that sort. But realistically, you want someone to represent you. Why? Because burden of proof's on the taxpayer, and that also can hurt you, right? When you get, I forget what the Miranda rights are, but when you get arrested, you have a right to attorney. Basically, you have a right to be quiet, okay? And in an IRS audit, you want to be quiet unless you know what you're saying so you don't get yourself in trouble. Not on purpose. You're not trying to defraud anyone, but sometimes you don't really know what you're saying and you may say something incorrectly. So you want someone to represent you.
Yeah, and we'll dive into some of the case studies and situations. I do have a few comments about this later on. But I did see one person who was in one of our communities, don't quite recall exactly which one, who wanted to send the IRS their entire QuickBooks work account and their entire QuickBooks account. Now, I'm not saying whether or not that's possible. The thing is, you don't want, like, that would have been an instance of probably giving away too much information that you don't want to. And we've heard other stories about even CPAs who were inexperienced in this area getting on phone calls and basically, I don't want to use this word, but giving incriminating evidence that would have thwarted the audit effort. So like Troy said, it's important that first of all, you work with somebody on this, unless you are an audit expert yourself in tax resolution, and B, you work with somebody qualified, because just because they're CPA or just because they're an EA does not necessarily make them qualified to help you in this situation. And we've already seen cases where people had to be removed from the situation because they were not quite qualified to work this despite being a CPA. So let's get into some of these case studies. Troy, why don't we kick off with the first one that we have here? This one looks like it was involving short-term rentals.
Yeah, and we'll kind of go through some various ones and so forth. I wanted to first just kind of mention this audit that we're going to go through it was an IRS office audit, but luckily because we were in different parts of the country, we are a remote firm, we were allowed to do it via calls and Zooms and Teams calls. So there are ways to do it even virtual in today's technology world. But in this case, realistically, they got a first letter. The client was obviously immediately scared or have that anxiety or freak out. So in that case, what do? They called us. They were our client for many years. So this is why this is a great one to start with. They were our client for many years. As I mentioned at the beginning of this, is we want our clients to be audit ready. Right. So what does that mean? At Hall CPA, we actually go through and say, do you have your material participation logs, your short-term rental logs? We make sure that whatever position we are taking on the tax return with you, that we can also substantiate it, right? So in this case, they had some anxiety just because you see that letterhead, you see that word examination or audit. They called me and our firm, and basically we took right off the bat, had a call with them within the first week of that letter, let them know, hey, this is the process. This is what's you're going to transpire. And we basically get them ready for that audit. Okay. Get them ready for the audit so they know what to happen. And I was with them on every step of the way for every call with the IRS, every document that I sent to the IRS and so forth. But where did the IRS focus their time. Let's get into that. So that's really how we got to this point. What was the IRS questioning? The IRS mostly was questioning Schedule E losses. So Schedule E is your, rental income or loss portion. It was a 1040, so it was a personal tax return. And they had a bunch of short-term rentals, okay? Short-term rentals actually in a different state than where they live. Okay, so that's also important because they need to prove material participation. And they do not have a property manager, okay? They managed everything themselves, even from an outside of the state, and not even an adjoining state. Probably, 3 to 5 hour flight away. So it was quite a big difference, okay, from where they were located and so forth. That was a big part of this audit. But what we spent time doing is explaining to the IRS auditor what was happening, where they lived, how they managed it, and then substantiated it. So we had a material participation log. So everyone that doesn't know, you need at least, there's 7 different tests to hit material participation. Well, the one test they were hitting was actually they were doing 500 hours and more, or 100 hours and more than anyone else. They actually technically hit both. But how do we prove that? We had a nice log showing the type of activity, the type of property, the day that it happened, what did we do, a description of everything that was done to help substantiate it. And the IRS was like, wow, this is awesome. Thank you. You guys made my job so easy, to a point where they didn't really contest a lot. Now, they did at certain points wanted to substantiate things. They said, well, you flew to this state for these properties. What did you do? Can you show your flight, your tickets? Okay, we showed them. Well, did you stay there for fun? No, look, right here. We worked on the property this date, this date, this date. So they didn't just, take it and say, oh, thank you, you're good. They did substantiate things, but a lot of it was focused solely on material participation. And then the other component was the rental stay. So you have to be less than 7 days. That's actually an area they probably spent more time than the material participation log. They wanted to ensure, when was check-in? When was check-out date? Was it the same customer? And so forth. How long did they stay? What did you do it for VRBO or Verbo or Airbnb? Did you rent anything outside of that? Did you have a cleaner? So they were asking all of that information, and we were able to provide it, logs, divided by, how many stays, to prove out that they were a true vacation or short-term rental.
So it sounds like the 2 main components of this audit were the 7 days or less. That was tested, and they did look to verify that. So this isn't just something we're talking about here on the show, and something we guide our clients on during our tax strategy engagements. This isn't because, we're not doing this for fun. We're doing this to help you in these situations. And they also looked at material participation and the time log. Actually, just by having a very clear time log, it sounds like that helped build trust or credibility with the IRS. And yes, they did verify some things, but because those things were verifiable, this all helped them in the audit. What was the ultimate outcome of this audit again?
Oh, yeah. I guess I should have mentioned that. That we got a no change audit here. So what is a no change audit? That just means that your tax return that you previously filed, there's no changes. So there was no additional refund or additional taxes owed. They're basically saying that the prior tax return that was filed, there was no change to it, correct, and so forth. So great overall result.
That's basically what you would consider a win.
That is a win. Yeah. Absolutely a win. Now, obviously, it takes time and effort to go ahead and do it, and there's always some pain, but overall, that is a win, because at the end of the day, they were no worse or better off than they were before. Actually, in my mind, they were better off. They have now the confidence that they can say that, hey, we can prove our tax positions for future years as well, because we already proved it and we have the information to do it.
2 questions I think some people listening might have is, did this person include cost segregation studies? And then number 2, how much time did it take of them or of us roughly?
That's a great question. So this audit did have cost segregation studies. I think on every property, there was 4 or 5, I'm forgetting, but 4 or 5 properties that they owned in the other state that have cost segs. All of them did have cost segregation studies on them. So in that case, they did provided the cost seg, but they did, honestly, in this audit, now in other audits it's been different. In this audit, they did not theoretically contest anything. Now we did do an additional reconciliation. We did, we had to send settlement statements when they bought the property and the land building allocations, and we did have to prove how the cost segregation study was applied to the building and land portions and so forth. And we sent depreciation schedules. So those were looked, but it honestly was not contested. They said, thank you. You have supported this and we agree we're going to move on. So they did look at it. They didn't question it, but they did move past it in this specific case, so forth. Didn't answer your other question. How much time did it take? It does depend. Because they were our clients previously, I'm going to just say that makes it way easier, right? We had a lot of information. Honestly, that audit, usually most audits can take 8 to 10 hours, can be wrapped up of our time, of our client's time. It's actually less because we're doing a lot for them. And we always advise them to be on some of the calls just because they can help, but to be quiet and defer to us, just to have that context. But for their time, it's, I don't know, 1 to 3 hours likely of time.
Nice.
With 2024 officially in the rearview mirror, now's the perfect time to start planning for how you're going to maximize your tax savings in 2025. With major tax changes looming under the new administration and IRS audits on the rise, navigating the tax code alone is now riskier than ever. Whether you're leveraging the short-term rental loophole, claiming the real estate professional status, utilizing passive losses, 1031 exchanges, or anything in between, our expert team of tax advisors at Hall CPA has your back. We'll help you uncover hidden opportunities and avoid costly mistakes that could put you at risk during an audit. With potentially tens of thousands of dollars of tax savings on the line, why wait? Visit www.therealestatecpa.com/podcast to request your free 30-minute discovery call today. Again, that's www.therealestatecpa.com/podcast for a free consultation. Let's help you ensure you keep more of what you earn in 2025. That's all for now, and we'll dive right back into today's episode.
Yeah, and from like receiving that letter to like the no change letter, how much kind of time had spanned there, like a month or a couple months?
For this one specifically, that one was, I think, only about 3 months from initial letter to conclusion, that no change letter. But we've had some go over a year, so it does depend on what they're looking at, what substantiation. It also matters on the auditor. Auditors are not this big old IRS, right? They're humans, just like you and I, right? So they have differing opinions and things they want to look at. So you have to kind of deal with the human emotion through the process a lot of the time, unless you're in correspondence audit.
All right, so that's a win for an audit. I think that the takeaway here that I had was 7 days or less, time log is important. Everything we help our clients do through our tax strategy and planning engagements specific to them ultimately help position you to win an audit if, God forbid, one does come your way, and they can come your way. Although they're low, audit rates are low, they can come your way. So that's just something to note.
And relatively quickly, I would say, at least from my own perspective. Like a couple hours of our time, a couple hours of their time, 3 months in this specific example. This is just one. I get that. It's anecdotal. We'll get through a couple more, but that was pretty fast, in my opinion.
Yeah, that's very quick.
So I think we have 2 more we're going to go through here, at least 2 more. We might get to a few more. But we have reps. Reps is another popular one, a strategy out there that people use. Could you kind of just walk us through this reps audit? What happened?
Absolutely. So this one's a little bit different. So just kind of give you the context. This was a client that came to us, or a prospect came to us specifically to represent them on an audit. So they were not our client, Hall CPA, before. So we didn't have a lot of context, a lot of work papers, a lot of documentation in our files, right? They were just coming to us scared because their CPA said, "We're not helping you. We have no idea how to help you. We're not going to help you." So not a great confidence builder for them on their prior preparer. But luckily, we were able to get on the phone with them. And honestly, I was the one, I hold the sales call, just trying to introductory. We do a lot of times from Hall CPA is we actually want to find out, can we help you? And we've actually had other ones. Now, this is not this specific case where I've had a call and I recognize that there's no way. They did some things in their tax return. They probably self-prepared it, or another CPA didn't know what to do. And we just tell them, like, I don't think you're going to win this. You said you're a real estate professional, but you have a full-time job and you don't even manage your properties. Probably not going to win, right? So if we're going to have that call, we might tell them, hey, we're not going to help you, or we can try to help you and manage the after effects of it, but we're, the rate of winning is not high. But in this case, the one we're talking about was a real estate professional case and so forth. On the phone, we're talking to them. I immediately found that they failed to report 2 income items on their tax return. They actually had a separate K-1, another business to report that they didn't report on their 1040, and they didn't report unemployment compensation that they had, okay? So on the call, I said, just so you know, I believe you're going to lose here, right? This is pretty obvious. The IRS has algorithms that they match up what was reported over here, like your W-2 versus what you report on your 1040. They'll match. So in this case, a K-1 versus their 1040 didn't match. So that's likely why the audit may have happened. I don't know for certain, but that's just my assumption. So in that case, they came to us. I figured they were going to lose overall, but I said, you know what, we can help you. And they're like, well, how can you help me? And I said, well, aren't you a real estate professional? They said, yeah, I'm an agent, I'm a broker, and I manage all my rentals. And I said, okay, well, do you realize that burden of proof is on you? I'm like, what does that mean? And I said, well, in criminal court, You have a person, a prosecutor is going to prove that you were guilty beyond reasonable doubt, right? But in tax world, you have to prove yourself innocent, right? So in a sense, not quite that way. That's why I joke. But really, burden of proof is on the taxpayer. So you have to prove to the IRS or eventually tax court, if you ever get there, that you have substantiation, you have documentation to prove the tax position that you took. So under that, they recognized, wow, I have no idea. How am I going to prove that I'm a real estate professional? I've taken these losses. I did do a cost seg on some of my rentals, accelerated depreciation, but I don't know how to substantiate that. What do you mean? So we walked through explaining what real estate professional status is and was, and obviously they qualified in this case. It was relatively easy to qualify, but then you have to prove it. You can't just say, well, yeah, I'm real estate. I live and breathe real estate. How do you prove it? Luckily, we helped them create a spreadsheet. They went back through their calendar and basically to break out what they've done, managing their own rentals as an agent, as a broker, to prove it all out and basically substantiate that part of the audit. And that was really their main tax driver. Okay, that was really writing off all of their taxes from the cost segs, accelerated depreciation they would not have gotten if we wouldn't be able to prove basically the real estate professional status and the groupings, elections, and so forth. So under that, we helped them build that, substantiated it all. And essentially through the auditor, this auditor was, I'm not going to say, was very, very intense to a point where they actually went through HSA reimbursements from $50 and we had to approve every single receipt throughout the entire year. It was quite intense and they were super happy with us. They are now our longtime clients and so forth. But we had to prove everything out. We spent thousands of documents to the IRS, proved everything out. They did end up losing, but they won, in my opinion. They did lose on the two items on the original sales call that I told them they were going to lose on, okay?
That was the unreported income.
Yeah, pretty simple, right? You didn't report the income. You owe tax on income you didn't report. So they did lose on that, but they won on real estate professional status. The auditor even, quote unquote, said, wow, I've never had someone that can prove everything that I've asked in a quick manner. So I was very happy. They had a lot of confidence in us. And they always say a lot of the audit is just testing trust of understanding is, can we trust you? And if you have substantiation, they usually trust you and you're very forthcoming in your answers. So that's how we won. I would say even further, we took it. That audit took a little bit longer. Once again, they weren't our clients. So that audit alone, I'd have to look back, but probably about 12 to 18 hours is what it took us to try to get everything up to snuff, for lack of a better term. But we did eventually win overall. I also, because of inquiry, recognized that their CPA prepared, the prior tax prepared their entity return and their 1040. They're the ones who failed to report the income, right? They gave the information. They paid someone to furnish that information to them. So we actually did what's called an abatement. We actually got they actually had a unreported income penalty. And in that case, I got it abated because they relied upon a tax preparer to do that information. And that alone saved them, that abatement alone saved them more than they paid us to actually do the audit. So in a sense, I kind of joke, but they actually paid us money, but they got more of an abatement back or a refund back in a sense from the IRS than they paid us. So to me, that was a win-win overall. Even though they owed the IRS money, we helped them save more money than they paid us.
Hey, real quick, if you've been a long-time listener to the show, then you know we give everything away for free, from how to use the real estate professional status and the short-term rental loophole to save tens of thousands of dollars on taxes, to upcoming tax changes, including the potential return of 100% bonus depreciation. We don't hold anything back. And the only way we're able to help more real estate investors is if you rate, review, and share the show. It just takes 15 seconds to leave a quick rating, review, or share with a friend who may find this information useful on their real estate journey. That's all for now. We'll dive right back into today's episode. So, learning lesson from this is report the income that you pay. I think that goes without saying. But reps audits can be won when you have the substantiation. It's not just short-term rentals that are being audited. Reps could come into play. So another win. And now, also one thing I kind of stuck out was the inadequacy of the prior CPA in this case, which failed to report the income that was given to them by their client and their inability to represent their client in this audit case. So again, for everybody listening, you want to work with people who know what they're doing, and it can set you up for success from the very beginning, right? And then also be able to defend you if and when, God forbid, an audit does come your way. And this is another win here on reps?
I think to really point out is I think they ended up very happy that their prior preparer was not adequate or not able to help them is what I should say. They did come to us because their prior preparer had no idea really what real estate professional status was or meant. They did actually report it, but they didn't really know the rules, okay, and didn't know log or weren't able to help them. And we did actually, I had a conversation with them to help support, and that's how we got this reasonable cause. So I do believe, though, if they didn't actually come to us and actually know the rules, I believe they would have been a worse off overall example. They probably would have not only had to report the unreported income, which was obvious, they probably would have lost out on a lot of those cost seg, accelerated depreciation. Now, I don't know for certain, but in that case, that's how we won. That was a lot of the value that we brought to them.
And part of it seems like the time frame of why this took longer was not only were they dealing with an auditor that was, like you said, more intense. So you've always got to consider the auditor of kind of how much time these things might take. But also maybe had they worked with us on the front end, it would have been a lot smoother as far as work papers and, hey, we've already got the time log evaluated, things like that. Probably would have made things go a little bit faster too. But yeah, that's a great case study.
Yeah, that's a good point, Ryan, is because honestly, we take that extra step, as I said before. We want people to have logs, right? We don't want you to create a log down the road. So in this case, they had to help create a log down the road. That's not usually correct from the IRS standpoint. You want to keep contemporaneous log at all times. So in this case, if you are our client, we mandate that our clients actually provide that to us. And we don't do that to be mean, right? We're not the IRS. We're not auditing you, but we want to make sure you're audit ready so you have that reduced anxiety if you ever get that lovely IRS examination letter.
And before I move on to what was the tax year that the first one and then this one was for? I don't think we mentioned that as we walk through these.
Yeah, that's a good question. So I actually might be switching these, but they were 2021 and 2022, but I forget which one.
No, that's good because point is, like we've talked about, I think on other episodes, this isn't like you submit your tax return and the next day you get a letter. This is like years later, right? So I just want to like call that out for people. Mm-hmm. You might think, ooh, I got through that tax return. I haven't heard anything for a year and I'm good. Well, not necessarily. So that's just all the more reason that you want to have this contemporaneous log that we were just talking about in all your records, right? You want to keep them, store them somewhere. We generally recommend, and Troy, if you want to comment on this too, but we generally recommend like digitizing receipts, invoices, things like that. Even your financial statements, make sure you've got that saved somewhere. Probably not just your QuickBooks file, but do download those, get those somewhere else. So this isn't like you submit your tax return and immediately you get an audit. This is years later. So you want to be prepared and doing this kind of documentation as you go.
Yeah, that's a good point, because if you try to recreate a log from 3 years ago, well, good luck. I don't know what I did last week or yesterday. I'm kidding. But in that case, that's really hard. 3 years is a long time to add the detail needed to substantiate a lot of things.
That's exactly what we help clients do here at the firm. So we got one more case that I think we're going to go through in a little depth here. And then I have two more comments on additional audits that I've heard about recently that we've helped successfully defend. But for everybody listening, this is just a sampling of a handful that we've helped defend. We've helped defend others, and we're going to continue to defend many more successfully. So if you're in an audit, you're experiencing an audit right now, you got that letter, you don't know who to turn to, I'm not going to give you the tax resolution IRS, pitch right here, but you go to the realestatecpa.com. So what you can do is check the show notes, fill out the form, and we can have a conversation on whether or not it's something we can help you with. And if you want to get in front of this beforehand, fill out that form as well. And we'd love to have a conversation about how we can help you before any of this happens. But that being said, back to the audit case studies here. We have the crypto audit, which is an interesting audit. You want to walk us through that one?
Absolutely. And honestly, this is a good case study after what you just mentioned. In this case, we came into the audit actually as the audit was closing. Okay. It was about to be closed and the client freaked out. Okay. And honestly, in this case, this client was a client, an active client of ours. But what they failed to do is they failed to inform us that an audit was happening. Now, they were audit ready, as I will say, but they didn't know what to say, how to substantiate certain things. They got to a point where the auditor essentially was closing the audit, and they said they owed $209,000. I'm estimating. That's a big number, okay? That's going to scare anybody. $209,000 is a lot. So they called us up and they said, okay, we need your help. We thought we could do it ourselves. So we educated our clients in a really great way, but they are still not representatives, okay? They don't know the inner workings of the IRS, how to support, kind of talk the talk, do references of tax court cases, internal revenue codes, treasury regulations to prove everything out. So we stepped in, and now granted, it's a lot harder to win. I'm not going to lie when you're farther along in the process. Not impossible, and as we'll explain, but we stepped in, immediately called the IRS, and the IRS, honestly, auditor didn't answer. So we had a number of his manager, supervisor. We called him. We sent fax. We did every possible way to get a hold of him. Within a day or two, we actually did get a response back. And this auditor probably was not the greatest or the smartest auditor of all time, as I will mention. But in this case, we said, hey, we have more to substantiate here. I'm not sure why you're closing it. The taxpayers didn't provide all the information that they need to you. We are welcome to provide a lot more information. So he did open it back up before he officially closed it. And we got the manager or supervisor from the IRS involved, as well as the auditor. And they said, hey, we'll take another stab at this before we kind of move on to what would we call appeals process and so forth. So we were happy at first, then we had to prove it all. So one of their main contentions, really two things here that they basically closed out the audit on. One is crypto equipment. So in this case, this client was a crypto miner. So they mined for crypto, and then they disallowed all of the equipment relating to basically computers to run the algorithms or run the calculations to basically mine it. Their response, the auditor said, well, crypto isn't tangible, so you don't need equipment to mine crypto. Like that doesn't exist. Crypto is fake, and there's nothing needed for crypto. Obviously, we all know, if anyone listener, hopefully you know, that that's not true. You do need a computer equipment to run calculations to basically earn the right to mine it, right, in that case. So they disallowed all the computer equipment. I forget the exact amount, but that was a big part of the audit. So we had to just basically outline exactly what crypto is, what it means. We had to prove all the invoices for all the crypto equipment and what each equipment does and how it's important to their business and so forth. So the taxpayers did end up helping us. They didn't realize they had to go through all of this detail to basically prove it out. Now, I will say some auditors may be more educated and understand crypto mining better than others. Once again, you're dealing with humans. You're not dealing with just this big conglomerate, the IRS. You're dealing with humans and their knowledge level and education and experience. So we went through and explained all of that. We ended up winning. I will tell you, it took a very long time to prove it. It took, we probably had to write about, I think, a 2 to 5 page memo explaining what crypto mining business means, why you need a computer equipment and so forth. So that was really the big part of it. The other component of this audit that they disallowed was basically they had a cost segregation study on one of their short-term rentals, and they wanted to look at basically a few things. But they did cost segregation study on it, on a asset or a property that was purchased in a prior year, placed into service in a prior year. They did a cost segregation study in that current year. They had to go back and do a Section 481A adjustment, or what we call Form 3115. They basically had to do a change of accountancy method for a property to basically change the depreciation method to now those accelerated depreciation. And what's called Section 481A adjustment is basically you're doing catch-up depreciation if you would have placed those classes of property in the correct buckets from the onset rather than in the future year, okay? So they disallowed that, and they said, I don't know what this is or what this means. So we had to explain to them what a 481A adjustment is, why we filed the Form 3115. Here's how we substantiated. Here's the settlement statement. Here's building and land. Here's the cost segregation study. Here's how we got here. Here's the depreciation schedule that was. Here's the depreciation schedule that is now with the adjustments, with the cost seg study. The difference of those two is what we call the Section 481A adjustment. So we had to spend a lot of time explaining that to them. We also had to explain material participation logs and the short-term rental, was it underneath 7 days or less, as we mentioned at the earlier case study. So as you can mention all the things that I'm saying, this took a lot of time and effort on this case, and this auditor was really fighting us, every little bit of the way. But as what I will say, the end result of it all is, I would say, is a win. Now, it was not a no change audit, but what I mentioned, we started at $209,000 they owed. We finished, the taxpayer owed $296, okay? And that's with interest and penalties. So in a sense, to me, it's a win. Now, there was one misclassified expense that they could not substantiate. And that's actually what led to the $296. And we could not substantiate that. They didn't have an invoice, they didn't have any support or receipt, the taxpayers. So we ended up obviously losing on that little component. But if I were you, if I started and came to my CPA or whoever's representing you with $209,000 and I got them down to $296, that's a win, right? And really, it was on them for not having that invoice. So.
Yeah, no, to me, that's an absolute win. Sounds like one on the crypto, one on the short-term rental and cost segregation. So those are two big wins there. And we have to keep in mind that this came back from the brink, or pretty much was just about to be a closed case of a loss because the taxpayer decided to try to do it themselves. We were fortunate enough to catch it at the tail end and basically win this audit for all intents and purposes here. So this is another big case. And this one was not just about short-term rentals here.
Yeah, absolutely. And to give everyone kind of an idea of timing of how it all transpired in timing is obviously, once again, we came in towards the end. So going back, it took about 3 months to get to the point where they owed $209,000. Not good, not a great result. So we came in 3 months into the process, is what I'll say. It did take about another 9 months to close. So it took about a year for this audit to go from the initial letter until we closed it. And it did take us even 9 months. Now, once again, we had to explain a lot of information. And it's not like you send information and they give you an answer that day, right? It can take weeks to give you a response at how the audit actually comes back and says, hey, thank you for providing. We reviewed it. This is our assessment of what you provided. That can take weeks to respond each time.
The audit, overall, would have taken far less time had they just started with us right away. Right?
Absolutely.
No doubt.
Yeah, absolutely. I think, honestly, because it was about to close, that made it worse. And that's how they made, make sure you had to prove a lot more. Because they, the taxpayers, they did not provide enough information up front. So they're testing you on trust. That auditor didn't have a lot of trust because they didn't believe there was any substantiation or support. Now, the taxpayers were thinking, this is easy. I'm ready. I'm audit ready. I've dealt with Hall CPA. I know what we're great. That sounds good, but burden proof's on you. You can't just say, I hired great people and it's just going to be fine. You need to have a representative prove that your position is correct.
And maybe from the beginning, they wouldn't have even tested whatever that invoice or receipt was that was missing, because they would have been like, hey, we trust you. Everything else seems good. We don't need to look into anything further. But because there was that questioning of credibility, now they're like, oh, we want to dig into these other things to really make sure.
Absolutely.
So, we could have done even better had they started with us right away.
Yeah, absolutely.
Yeah, a lot of great case studies here. I'm going to just highlight two other case studies briefly before we wrap up. I had one from two other team members, both of them involving short-term rentals. One of them just wrapped up recently. This actually came from a pretty well-known influencer who told their client that they would not represent them in an audit. And long story short, this short-term rental audit came through with a result of no change, which again is a win. There was no change. The person basically won and substantiated their position. What was particularly interesting about this case, and again, not going to get too much into details, this came from a competitor of ours who's a pretty well-known influencer out there in the real estate space. And for them to tell them that they're not going to represent them in an audit and have to have their client seek us out to defend and successfully defend them in an audit is just something to be watch out for. There's a lot of people out there who can talk the talk, but can't necessarily walk the walk. And I said this, I think, maybe in one of our previous episodes, but I truly believe this, and I'm not just saying this, that we here at Hall CPA, we are the best in this space. And there's continuous data points between questions that we get asked from other CPAs and things that go on in their internal forums and things like that, to situations like this where their clients are either switching to us or coming to us to help defend them in an audit. And this was just a case study here and on that as well, not only the short-term rental. There's one more case study, another short-term rental case study, long story short, that we defended. Shout out to Paul here in our team. A long story short, that was a short-term rental one, another no change audit. So we have the track record. And guys, this is, again, for everybody listening, just a fraction of the ones that we're successfully defending. We can't go through all of them here, but this is what we're seeing. So any final thoughts, guys, before we wrap this one up?
Yeah, it's interesting to see some of the people who, even as you mentioned, Tom, kind of being what we would say, right? We kind of pride ourselves on this and we have a lot of conviction around this. It's why we're talking about these things. Like we do think that we're really good. It's not meant to come across as arrogant or prideful. It's just literally, we think that we do a good job and we want to do a good job. We continue to try to get better all the time and we like feedback from clients. We're always striving to be the best. best in class service is kind of a phrase that we throw around here. But we've even seen clients who started with us early and then go to some of these other kind of real estate tax influencers and then come to find actually things haven't gone as well, and they circle back to us because they know that we can get them the highest quality and the best experience. So just know that, yeah, you might be kind of evaluating other companies and people and whatever as you look into this space, and as you might be buying more properties this year, looking to expand your portfolio to save more on taxes. Maybe you just want to start with someone of high quality and a good client service from the beginning, so that right away as you get into this, or as you are starting to build your portfolio more significantly, we can be there to back you from a tax perspective and be that aspect of your team as you look to grow.
Yeah, that's very well said. I'll just do my quick tidbits to understand, take from this, right? These are some of our cases that we've seen and done, but I'll just say the main reason people lose in IRS audit, burden of proof's on you, but realistically, bad bookkeeping, bad record keeping. So that's holding your invoices, obviously bad financial statements and so forth, but also not having your real estate professional logs or material participation logs, or not proving your rental stays if you're going to do the short-term rental loophole on that side. So that's usually how people lose. So if you have all your ducks in a row, you're going to be in a really great spot. Also, if you get that letter, and that letter, you're going to get that anxiety, immediately reach out. You reach out to Hall CPA, reach out to your other provider if you don't want to use us. But we obviously have a lot of experience in that arena, and making sure that you have someone representing you to essentially prove out any tax position that you have. You guys may be very intelligent people in your own careers, but if you don't live and breathe, talk to talk, walk to walk, as Tom said, in this tax space, you really want someone to represent you to make sure no issues. And you don't ever get that $209,000 scary letter that says you owe them that. Start from the get-go and then have a better result.
Even as a CPA, I cannot imagine getting a letter from the IRS saying I'm being examined, even as a CPA. And as someone who's not using anything crazy, creative, unique, nothing even on like the close to risky spectrum, I can't imagine being not a CPA and not a tax person, and then trying to do it myself using some of these strategies. Like, I can't imagine the emotion that other people are feeling, not being kind of who we are and having the experience and the understanding of how these things work. So absolutely, like if you've got that, just find someone, even if it's not us, it's just your own best interest. We're here to help. We've helped other people as we just went through. But yeah, reach out to someone to make sure that you're not trying to do this yourself. This isn't something to do yourself. Mow your lawn yourself, cut your own hair, whatever it is. Don't go through an IRS audit by yourself, please.
Yeah. And I think we have plenty of case studies to show that here. So here's the bottom line. So that'll be the final word. If you are facing an audit right now, we are here to help. So you could fill out the link in the show notes below, book a discovery call, see if we can help you through your audit. We'll let you know our honest opinion, like Troy mentioned before, whether or not you have a chance or not, and we'll help you navigate it in either case. But also, if you do want to get in front of this stuff and make sure that you are set up the right way for an audit, like Troy had mentioned, when you are a client of ours, we are setting you up from the beginning so that if an audit ever does occur, that it's an open and shut case. And because we have all your information, if an audit ever does occur, we can successfully defend you much easier because we have all that information right here. So again, link in the show notes for a free discovery call, see how we can help you either set up your tax plan from the beginning and or help you defend an audit if you are currently going through one. Also, with 100% bonus depreciation very likely making its way back, we are going to get busier. We're already seeing people starting to jump on that as this new tax draft came out, which we've talked about on another episode here. But with that coming out, this space is only going to start heating up, which means not only are people going to get much more busier, but the tax savings are even more substantial, which is even more the reason why you A, want to do this the right way, and B, if you are ever audited, get representation to set yourself up for success. So that's going to be it for today's episode. Thank everybody for tuning in, and we'll catch you on next week's episode of the Tax Smart REI Podcast.